Hey guys, this is Karthikeya Kantwal from Apex FinServe, and we'll be going through the same old routine, 5 trades for tomorrow's session, along with the indices, commodities, and the Forex outlook for tomorrow's session. But before we begin, the roundup of today's watchlist trades that we had. So we had PL and Apollo Hospitals giving the targets, along with USD INR also hitting the target. On the stop loss side, we had GBP INR, which took the stop loss away, and well, Crude is running position as of now. It is almost 8 p.m. but it's still running. Let's see where that goes. All in all things considered, we had a good green day, and I hope the same goes for you as well. So without wasting further time, let's begin discussing the charts for tomorrow's trading session. So the first one that we have, as usual, SRT Finance, SRT Transfin. The SRT Transfin will be entering a long position, keeping in mind the recent structural formation. If you are kind of familiar with chart patterns, you can observe that after one completion of high formation and breaking of the previous swing high, if you consider this to be the resistance level and a trend line at this point, it is forming somewhat of a distorted ascending triangle. Not exactly a textbook example, but it's valid enough to be considered at least. So we'll be entering a long position only above that resistance level. So for SRT, our position is going to be a long one above 695, with the stop loss going at 685, sorry, and the ideal targets being 1% as well. Moving on to the next script that we have, Apollo Hospitals. Apollo Hospitals, again, since a couple of days, we have been doing the same things. Considering the high low structure formation, we are simply entering a long trade in the direction of the structure at every pullback, and it seems to be working pretty fine for us. We have had no issues with it whatsoever. So the same is going to be done tomorrow. We'll be entering a long position only above 1490, with the stop loss going at 1470 and the ideal targets 1% as usual. Moving on to the third script that we have, Just Dial. Now Just Dial, it has underwent a market phase transition. It went from trending to range bound, and then further it has seen some range contraction. So we'll be going a bit aggressive now, considering that it should break out. Now this support level seems to be holding pretty strong. There's no issue with it whatsoever. So we are going to be taking a long position at 370, which is, well, it has made two same swing lows at that point. Plus there is some sort of a demand zone there as well, with the stop loss going at 365 and the ideal targets at 1% as usual. Fourth script that we have is PL. PL, we are going to be taking a long position, despite if you were to draw a trend line, you'd say, oh Karthikeya, it's bearish. Well, it was bearish, it was making lower low, lower highs, but if you compare the distance between these two lows, that's not as much. But if you compare the distance between these two highs, the demand has grown a lot when compared to the increase in the supply, because of which the low is not that much of a actual low, but rather just a namesake lower low, whereas the high, which was supposed to be less than 50% of the previous swing leg, is now almost completely the previous swing leg. So we are going to be entering a long position, anticipating opposite side structure formation of high lows, a pullback, and then new higher highs. So we'll be entering a long position at 1385, with the stop loss going at 1370, the ideal targets being 1% as usual. Moving on to the final equity script that we have, IndusInd Bank. IndusInd Bank, it was making high low. It has completed one part of the structure, but if you consider today's movement of these candles, then it did make another higher low, but it could not make a new higher high. So we'll be entering a short position once that low is taken out and it is confirmed that this high low structure is invalidated. So we'll be entering a short position on IndusInd Bank only under 520, stop loss being at 528, and the ideal targets being 1% as usual. Yeah, coming to the indices, first starting with Nifty. Now Nifty, as I have been saying, since it has broken out of the range, well, planning short trades is kind of tricky because you don't have any recent market resistance levels or supply zones available. If you are plotting them, you are dragging them out from a couple of months ago, and they can turn out to be quite sketchy. So it is better to align yourself with the trend to enter into long positions at pullbacks or at available demand zones on the downside. So if you were to take a trade on Nifty, then the preferred trade would be, if 11,000 level is to be sustained, then you can go for a long position somewhere near this zone 975 to 11,000 levels. If you look for the confirmation of the option chain for Nifty, so the option chain says that you have your immediate resistance at 11,100 with 465,000 added open interest, and significant resistance at 11,200 with 525,000 added contracts. Now coming to the support side of things, that is where it gets interesting, because the puts have been written very aggressively. You have more than 1 million added contracts of puts on both your immediate as well as your significant level of supports. Talking about the immediate level of support, at 11,000 you have 1 million added contracts with total standing contracts at 1.3 million. That means it has seen almost a 300% increase in the number of writers standing at that particular strike in one single trading session. Coming to the significant level of support, you have 10,900 with again 1 million added contracts and 2.1 million total standing open interest. Coming to the PCR for Nifty, well, PCR of volume comes out to be at 0.91, which means that option buyers are still for some reason bearish on their analysis, or we hold a bearish bias. Coming to the next index that we have, BANKNIFTY. Now coming to the next index that we have, BANKNIFTY. Now BANKNIFTY, it has now I also told you guys that I would like to plan out a trade near this level, about 22,500, 22,400, and well, the price interacted with this level all day, failing to surpass that, and you could have easily caught 100, 150 points again and again. Very simple trades you could have managed to take if you had done even a little bit of homework, or even a little bit of post-market analysis. Now for tomorrow's trading session, I would again wait for price action near this zone, 22,450 levels, 22,460. It is pretty much make or break. If it does break it, it might as well go to 23,000. If it does not break it, it might come down to 22,000, 21,800 as well. Getting the option chain levels for support and resistance on BANKNIFTY, well, we have your immediate resistance at 22,400 with 118,000 added contracts. Your significant resistance at 23,000 with almost 200,000, 198,000. So almost 200,000 added contracts. On the support side of things, you have immediate support at 22,200 with 87,000 total added contracts, and significant support at 22,000 with almost 386,000 total added open interest. Now let's see how it pans out for tomorrow. Once again, as I said, before planning your trades in BANKNIFTY, just wait for some time as the market opens for 30-45 minutes. It doesn't hurt. Wait for confirmation of price action, candle structure, anything, some price action concept that you use near this particular zone. It should reward you pretty nicely. Now coming to the commodities section that we have, well, these are the same zones that we had plotted yesterday as well. So silver has, as of now, of course, what we had a planned position was we are going to sell silver under 52,750. That wasn't triggered today, but it broke out of the above zone. It broke out of the supply zone, and as you can see on the chart, it has relentlessly gone up from 53,200 to almost 54,000 now. So that's almost 600 points you could have had if you were an aggressive trader using these supply and demand zones. Now for tomorrow, we do not have any levels planned as of now. Simple reason being that, well, as I tell you guys, say for commodities, the markets are going to be open till 11, so we can't plan a trade for so far away in advance. Another reason being, particularly for silver, well, all-time highs. So planning trades, you need to be really careful, because you don't have exact resistance levels, or you don't have probable levels where the momentum can slow down or the momentum can pause or exhaust itself. So you need to be careful. But a rule of thumb would be, if it is forming all-time highs or all-time lows, anything, try to align yourself with the trend rather than to forcefully catch the bottom or the top. Let's see how that goes. For the trades on silver, as I keep on telling you guys every day, check out the channel at Telegram @ApexFinServe. You can find all the trades there around, well, for equity, all of them are uploaded before 9 a.m. For commodities, they come around 10 a.m. So you can find that there. Alright, now coming to crude, we had a trigger that we were going to, well, not a trigger, we had a trade exactly, to be exact. We had a short position only under 3000, well, which was triggered, and looking at the movement in the past 30 minutes, it seems that our stop loss was hit. Well, alright then, still a green day for us overall, but this counts as a stop loss. So stop loss hit on crude. For, well, this zone, it has been on the charts for 2 days. I told you guys that time as well. Keep your eyes out. Turns out that this zone was a false breakout. Now this trade was triggered because we used bracket orders, but if you had waited for a candle confirmation close or a candle close confirmation or two candle close confirmation, you could have easily saved your money here at this point. For tomorrow's trades on crude, we'll be looking to trade either above or under this level, but this zone is going to be something that we are going to watch out for. For the exact levels, check out the Telegram channel. Somewhere around 10 a.m. tomorrow, you'll get the answers. Coming to the currencies, well, I told you guys, I shared this chart yesterday as well, that GBP INR has closed near a demand zone. It opened near the demand zone, and as I tell you guys, a gap up breaking of the zones does not count. It quickly reclaimed the zone and re-established that yes, the support was still valid, the demand zone is still fair enough, it's still strong enough to hold its own, and then could have easily taken a long position and ridden it out all the way upwards. So very simple trade on GBP INR. We took it personally as well after the stop loss was hit on the watchlist trade. You could have done this as well if you had done your homework. Coming to the final chart that we have, USD INR. Now USD INR and GBP INR both once again have closed near a zone or at a zone. So planning our trades is well, it's kind of confusing, because if you end up taking a trade exactly at that level, you end up being overly aggressive, which if not done in the right manner can give you unnecessary losses. So we need to be a bit conservative over here. Now because these are global currency markets, global currency contracts which are being traded, we'll consider those charts as well before we share the levels with you guys tomorrow morning. So we don't have exact trade levels for these 4 things. Now if you want any of these charts, all 4 of the 2 commodities and 2 currency pairs, or the indices, or even the option chain analysis, feel free to check out the Telegram channel @ApexFinServe. Or if you want the watchlist trades that we just discussed, those are posted there as well, so you can check them out over there. Now this is all that we had for today, guys. Thank you so much for watching, and if you like the analysis that we have been posting, if you like the discussions that we have been having, please do like, share, subscribe. It does not keep us happy, but it does kind of motivate us to shoot these videos every day. Now thank you so much for watching, guys. I hope you guys have a good green trading session tomorrow. Have a good night. Thank you. Bye.